Hello, I'm Tim Beggins, president of Elk Trading Company. And today, the natural gas weekly recap. Natural gas prices are higher. This is for the January contract, which is expiring on Monday. Today is option expiration. Also on Monday, the EIA storage report. Currently, right now, we're trading at 4.3055, up 11.3 cents or 2.66%. As you can see, the RSI is open and the averages are trying to cross, but we got lack of time. We've only got two trading sessions today and Monday before this contract expires. What else is going on? Well, for the option expiration today, we've got a cluster of option open interest around the 425 and 430 strikes. So that means we have pin risk. That means futures go off the board exactly at the strike. And so we're going to see a lot of choppiness right here between 425 and 430 because that is, of course, today is option expiration. So let's turn to the hourly chart. And as you can see, we're hovering right around the daily pivot at 433.80. Currently, right now, we've got support well below the market at 408.40 and our first resistance well above the market at 449.70. So right now, it looks like we're going to go sideways around this 430 strike for option expiration. And let's look at the front to back spreads. This is the Jan 27 versus the April 26 contract. And as you can see, we got above our 1505 resistance level, but failed to get above 155.60. That's our second resistance level. And right now, because there is some more cold on the forecast, we're going to chop around here between that 193. That was our first resistance, now support, and this 1505 area. What else is going on? Well, take a look. The April through October strip is starting to chop around this value area around 360. And that's important because the RSI is turning higher. What does this mean? Well, these continued cold waves plus European storage, we'll talk about in just a second, looks like there's a bid underneath the market. What else is going on? Corpus Christi Train 4 has substantially completed. That's 10 MTPA per year. That means we've got about 1.3 to 1.7 BCF of new gas demand coming online. And guess what else is coming soon? Golden Pass, which is another 2 BCF. So the market may be well supported here by both LNG, power, data centers, and just industrial growth. So there's European storage. We're currently sitting at 65.2%. We're about 11% below the 5-year average, which means there's a bid for US LNG to refill stocks. That Ukraine war is not ending anytime soon. As Russia is finding out, Ukraine is like Rocky Balboa. It just won't go down, which means this war will continue to drag on until Ukraine wins or Russia collapses. And here's the 8 to 14-day temperature outlook in the United States. As you can see, we've got some above normal temperatures with just some below normals here in New England. But as you can see from the weather models, we get colder. This is the 11th of January. And as you can see, there's this big swath of cold air that comes in directly into the center of the country, heading toward Texas. While there's some cold air still sitting over New England and parts of the Great Lakes and Mid-Atlantic states. What else? Europe. And it's going to be colder there too in January, about the 9th. Here is the coldest temperatures. As you can see, we've talked about this cold Arctic air splitting off and heading toward Europe, as well as the United States and parts of Asia. And here's Asia. And this is that Siberian cold descending down through Mongolia and parts of Russia, keeping Korea's, Japan, and parts of the China around the Beijing capital city area quite cold. So we'll see if this is a bid underneath the market again. Here's the ice and snow. As you can see, the Hudson Bay has completely covered up on the northern passages. Therefore, the body of water is now covered partially in ice, which will allow cold Arctic air a straight shot right over that body of water into the Great Lakes, Mid-Atlantic, and New England states. And here's our oil and gas E&P sector, stocks between $2 and $10 billion and have a high short float. Welcome, Crescent Energy, CRGY. It's on the board for the 1 week. So far, CRK, Comstock Resources, up 10%. So watch out. If this cold weather really does start to materialize, CRK, CNG, BKV, and maybe Crescent Energy will all start to go mainly green. So again, recapping here for the natural gas contract, this is January, expires on Monday. Remember that. We also get that storage report, which is expected to be about a minus 170. That's bullish against last year's about 93 withdrawal. But then we've got a warm period. And so we're getting close to eliminating that 5-year surplus. But then after you get a few more weeks here, again, there was a big pull last year in January. About 1.533 TCF was pulled in a 7-week period. So we've got to be careful here. We've got to get cold. Otherwise, that surplus will blow back out again. So here we are currently trading at 437.60, up 13.4 cents or 3.16%. Again, watch. Today is option expiration. 430 strike looks like it's in play. Let us know your thoughts in the comment section below. Please hit that like and subscribe. Thanks for listening. We'll see you soon.